Welcome to Option Trades Today. I'm Tony the Bat Batista right here from downtown Chicago inside the Batcave on April 18th, 2024. But first, as we always do, I've got a trade for you, but let's look at what the market's doing. Even the S&Ps up 24 handles after selling off earlier this morning. You can see they got down to 50.50. They are trading about 6 or 7 handles off of their highs of 50.92. NASDAQ up 41, and the leader to the upside is the Russell, up almost $20 on a percentage basis, up almost 1%. The Dow up 293 is up almost as much, around 0.75 percentage point. Volatility in by 40 cents. If you were watching the show today, Tom and I talked a lot about volatility. It was trading around $17, $17.10. Even though the market was going lower, volatility was not going higher. We both talked about how maybe this would give a little bit of breath to the market, make it kind of move a little bit higher, and it has. What it does from here is anybody's guess, but you can see volatility. Key on that, it's down a little over 2.5% right now. If volatility stays weak, I don't know, I think the market's going to stay up going into expiration. Bonds down 16. Gold has had a little bit of two-sided action. It's still to the upside, up $7 and change, and oil down 45 cents. Okay, you know what I like to do? I like to put on post-earnings trades. I have my high option volume here. Netflix has earnings after the close today. It has a good IV rank of 77. I try to avoid earnings as much as possible. I'm going to avoid earnings here today on the show and go to a post-earnings trade. So the first thing I'm going to do is click on earnings so that we can get rid of all of those trades that have, all of those stocks that have earnings to them. Just for the ease, I've already looked at this. I'm going into JP Morgan. I'll show you what JP Morgan looks like down here. You'll see there's no earnings on the right, so that's my first thing I need to get done. The stock is up $3 right now. It's at or around the higher end of its range. So maybe when you see this, if volatility goes a little bit higher, or maybe the market goes a little bit lower, you'll be able to put this on even better than I put it on, because I'm going to be a little bit bullish in JP Morgan, even though the stock is up $3 today. Not the best setup. I like when a stock is lower to put on this type of trade, but we'll look at JP Morgan and just the reason why I'm doing that. The IV rank over the last 5 days is down by 3%. That's not a lot relative to a stock that's already had earnings. IV rank of 30. Let's look at it on a chart. You can see it has come down quite nicely from an IVR closer to 60 to 30 over the last 5 days. But when you look at this IVR down here at the bottom, you know what? It's at the higher end of its range. Even when you look through past months, you would expect the IVR to be closer to the teens. Maybe we can get a little bit of volatility contraction, a little more volatility contraction in JP Morgan. So the first thing I looked at was really to look at an iron condor in JP Morgan. I want to be out in June. Why? Well, June has 64 days. May has 29 days. We like to have around 45 days when we put on a trade that's optimal for us. So you might say, why not go to these May 31st options? When you look at these options in JP Morgan, on paper, they don't look like they're that wide, 10 cents wide, 15 cents wide. Let's go to the volume and see what it looks like. You'll notice there's a couple of hundred of each one, not a lot of volume. When you look at the open interest is also only in the couple of hundreds. It's not that much. Let's look at what June open interest is. June open interest is in the thousands. You want to be where markets are liquid. This is a good way of just showing you that markets are very liquid in June with 64 days versus any of the other weekly months that you might look at. All right, what am I going to look to do in JP Morgan? I said I wanted to do an iron condor, and I usually like to do an iron condor around the 20-25 delta. Let's go to a $10 wide iron condor. 175, 165 gives me $1.50. If I could collect $1.50 on my next spread, I might look to do that trade. Here you got $3.10. Which would be good, collecting 1/3 the width of the strikes of this trade. But look at my pop. My probability of profit's only 57%. I like to have my probability of profit over 60 to 65%, 65% or more being optimal. So I might take a look at bringing these back one strike and see how that looks. I'll go to 170. Now I'm only collecting $1.81. I do have my probably a profit like I wanted, but I don't have the credit received, so that doesn't work for me. So let's go down and move these and use a little bit more buying power. Go $15 wide, and here you'll see I'm only collecting $3.60. So what's happening here is this monthly implied volatility of only 21 on a relatively high price stock, $180 plus stock, is making these spreads trade too cheap for my liking. So even though I would like to sell both sides on JP Morgan, and even though I would, find that to be the optimal trade, the options and the implied volatility is not giving it to me. So I have to get a little bit directional here. My direction is going to be slightly bullish. Now, how do I get to a slightly bullish trade? Yes, I could do a broken wing butterfly. I don't want to go through another exercise of showing you why I can't do that, because you just don't collect enough credit. I could do a ratio spread. I did think about buying the 175, 170, 1 by 2, but it's only 62 cents. So I'd have to bring that a little bit closer and go to the 180, 175, and only gets 99 cents. I like to make around $1 on these trades, and if I'm only getting a credit of $1, I'm gonna have to hold this pretty much for most of the expiration, if not all the expiration. So that throws out the ratio spread for me. So what am I left with? I'm gonna be left with a Jade Lizard, which is the simultaneous sale of a put and call spread. Now, why does this fit? Well, the stock is inside my strikes, meaning my 85 call that I'm going to sell is outside the money, and my 80 put that I'm going to sell is also outside the money. I'm going to buy one strike above, which is 90, which gives me a credit of 608. I actually got filled at 606 on this trade, so you could do it a little bit better than me, possibly. I'm selling the 185, 190 call spread, and I'm selling the 180 put. I'm using about $3,600 in buying power. It is a long delta trade of 26 long deltas. Fits my assumption. If you're not omnidirectional to slightly bullish in JP Morgan, then this is probably not the trade for you. And it gives me a pop of 71% over my 65% that I was looking for. My break even is down at around 174. So you might be making the argument, why don't you just sell the 175 put, or maybe the 180 put just naked? You certainly could. For me, I like the idea of being short this call spread, this 185, 190 at almost $2.20 some odd cents, gives me a little bit more room on this trade. If JP Morgan only has a $9 and change expected move for the month, and it's up $3 already, selling the put with the stock up, a third of what it should be doing for the whole month, just doesn't sit right with me. So I'm looking to sell something on the other side. You certainly could go up to the 90, 95. You would be collecting over that $5. Your pop would be very nice at 70% also. It does give you a little bit more delta on this. So you certainly could be doing a trade like this if you're a little bit more bullish on, if you're a little bit more, want to have a little bit more of a larger win rate, but your break even is going to be lower, so you're going to be a little bit more bullish on JP Morgan. You certainly could do that. I'm a little bit more bullish to neutral, so I'm going to go with the tighter spread, 85.90, 180. I got filled at 606. Remember, this green line shows you where the stock can go. It can go anywhere to the upside, and you make money. Your break even's right at that green line, around 174 on JP Morgan. JP Morgan hasn't seen 174 in quite some time. As a matter of fact, you got to go back to early February. The last time I had 174, and it's come down nicely. I'm trying to catch a little bit of a falling knife in JP Morgan. All right, everybody. That's my trade for today, and maybe I gave you a little bit of exercise why other trades that I like to do in this stock didn't fit. So maybe you learned something there too. You know what? I've also always asked you, and you've really come to bat for me, no pun intended, by transferring your account to Tasty Trade, the number one brokerage number one brokerage firm in America or all the galaxy. Please continue to do that for us. You also can take advantage of some of the money that they give out for moving your account, almost up to $4,000 depending on your account size. So please transfer your account to Tasty Trade and help us keep the lights on here in the Bat Cave.